लास्ट 5 years में गोल्ड प्राइसेस में इतना हाई क्यों? तकरीबन 125% से लेके 140% का ग्रोथ रेट हमने गोल्ड प्राइसेस में देखा। एक कंपनी है इटर्नल जोमेटो, फॉर्मरली इट वाज नोन एज जोमेटो, जिसका शेयर प्राइस पिछले साल लगभग मार्च में 2025 में 200 रुपीज पर था और अभी फिर मार्च में लगभग 200 रुपीज के आसपास रहा। जबकि लास्ट 1 year में द कंपनी हैव शोन द ग्रोथ इन शेयर प्राइस 345 इज द हाईएस्ट। तो ये प्राइस 200 से स्टार्ट होकर 345 पे गई, 345 से वापस आके 200 पर कैसे आ गई? एलसीड इन्वेस्टमेंट एक ऐसा कंपनी का शेयर है जिसकी प्राइस 1,18,500 है, जबकि उसका मार्केट कैप सिर्फ 2,370 करोड़ रुपीस। जबकि 1.5 करोड़ के साथ एक कंपनी जियो फाइनेंशियल्स, जिसका मार्केट कैप 1.5 लाख करोड़ है, जिसका करंट मार्केट प्राइस सिर्फ 234 रुपीस है। ये कुछ क्वेश्चंस है जो कि माइंड में आते हैं प्राइस और वैल्यू को लेकर। इसी तरह एक कंपनी है दुबई की, जिसमें जो दुबई का एक बैंकिंग ग्रुप है, जिसमें आरबीएल में रिसेंटली $3 बिलियन का इन्वेस्टमेंट किया और 74% स्टेक, इक्विटी स्टेक ले लिया। इसी तरह रिलायंस इंडस्ट्रीज लिमिटेड ने अभी फिलहाल इट हैज बीन अनाउंस दैट 10 लाख करोड़ रुपीस इन्वेस्टेड, ऑलमोस्ट $110 बिलियन इन्वेस्टमेंट इन एआई एंड डेटा इंफ्रास्ट्रक्चर। इतना बड़ा इन्वेस्टमेंट एक पर्टिकुलर सेगमेंट में। तो ये जो इन्वेस्टमेंट है, ये जो प्राइजेस है, ये जो चेंज है, टेस्ला का इतना हाई वैल्यूएशन क्यों है? क्यों कुछ लॉस मेकिंग कंपनीज जो कि एक्चुअल बिजनेस में लॉसेस बियर कर रही है, बट देयर वर ह्यूज फ्लक्चुएशन इन द प्राइसेस। तो प्राइस उनका फ्लक्चुएट कैसे होता है? इन्हीं क्वेश्चंस को लेकर आज हम डिस्कस करने वाले एक बहुत ही इंपॉर्टेंट कॉन्सेप्ट वैल्यूएशन का, जिसमें से CFA लेवल 1 के लिए इक्विटी वैल्यूएशन एक बहुत इंपॉर्टेंट टॉपिक है और हम इस पर आज डिस्कस करने वाले। जो इक्विटी वैल्यूएशन है इसके ऊपर हम बाद में आएंगे, बट फर्स्ट आई विल एक्सप्लेन यू अबाउट वैल्यू, प्राइसेस एंड वैल्यूएशन and different types of valuation. So let's discuss value. So how this value changes over the period of time, and how this value is calculated, right? This is very important to know. And believe me, financial world का valuation एक ऐसा टॉपिक है जो सबसे ज्यादा रियलिस्टिक टॉपिक में माना जाता है, and very important because it actually talks about the real worth of any asset. Technically it is known as intrinsic value. We'll understand later in this particular video. So इस वैल्यूएशन को समझने के लिए सबसे पहले हम समझते हैं कि वैल्यू ड्राइव कैसे होती है, वैल्यू चेंज कैसे होती है। So how value changes? First we talk about how value is calculated, but the most important thing is what actually creates value. What is the main factor which actually creates value, right? So this is something that we have to discuss first. Which factor is responsible in creating this value? Taking an example of cricket in India, because IPL का सीजन चल रहा है। वैभव सूर्यवंशी एक ऐसा क्रिकेटर, the most youngest cricketer in IPL history. It has been taken by Rajasthan Royal at 1.1 crore rupees. And on the other hand, KKR have taken one player named Cameron Green. It was taken by KKR at a price of 25.20 crore rupees. Now, what happened after this? 13 इनिंग के बाद वैभव सूर्यवंशी has almost scored near to 600 runs, having a average of 45, and Cameron Green, who have taken 25.20 crore rupees, उसने लास्ट 11 और 12 इनिंग्स में 39 के एवरेज के साथ ये तकरीबन 350 रन के आसपास उन्होंने स्कोर किया। नाउ in this example, where the value lies, right? So in case of Vaibhav Suryavanshi, a high performance plus low expectation, because it has been given only 1.1 crore rupees by the franchisee, a high performance batsmen which have massively create history and scored run, right? So, and with very low expectation initially, and this actually creates a massive value, which we call it over delivery, right? On the other hand, Cameron Green, a moderate performance, but having a very high expectation, which actually equals the deficit in the perceived value, under delivery performance, right? So we can say, now what we can say is the value is actually equal to the performance over expectation, right? So what I believe, value, if we just simply discuss what is value, it is nothing but the performance over expectation, how you are expecting, expectation, performance over expectation. If you are very expecting something very high in future, so it is actually no. So if you see the relationship between value and expectation, it is you know, not directly proportional, but performance, high performance and high value, it is showing a direct proportion, right? So basically value is nothing but a reward. Now talking about in terms of finance, value is nothing but a reward that investor expects to receive in future, right? And asset derive its value, any asset derive its value from the future benefit or future cash flows that investors expect to generate. So this is the real foundation of value valuation topic, Equity Valuation topic. Now talking about something, the different assets like stock, we see the future earning, and अगर कोई asset एक साल में it is increasing to a very high level and again going down and again increasing, so this is something, what this is value, उसकी value क्या होगी, that we have to just need to. Bond के case में same case goes with that, interest income is something that we are expecting in future. Real estate के case में there is a rent and appreciation, right? That what exactly we are expecting as a honor of a flat or a house which we can give on rent, और जहाँ पे capital appreciation भी है. तो जहाँ भी future expectation होगी, जहाँ भी इन्वेस्टर को ये लगेगा फ्यूचर में इसकी प्राइसेस बढ़ेंगी, वो उस चीज को वैल्यू देना स्टार्ट कर देगा. और यही इसका एक बहुत कोर कॉन्सेप्ट है. कोई सा भी एसेट आप ले लें, गोल्ड ले लें, बिजनेस ले लें, कुछ भी ले लें, तो ये जो भी चीजें फ्यूचर में आपको एक कैश फ्लो जनरेट करती है, एक प्रोजेक्टेड कैश फ्लो आपका है कि इट इज देयर इन योर माइंड व्हिच एक्चुअली क्रिएट्स वैल्यू टू यू. सो इफ यू सी दैट फ्यूचर वैल्यू इज नथिंग बट फ्यूचर expectation, future expectation in terms of reward, right? But now let us take this, I'm taking this topic from so now we have already created a framework that what exactly the value is. Now let us understand the value and price. So what is the difference between value and price, right? So that is also we need to understand. So value is actually what we get, what we get, and price is something that we paid. So what we pay or what we paid is something called price. So value and price, we just understand it. So, and it is equal to the future expectation. Now connecting all these points and taking you to the equity valuation part, right? Now coming on to the valuation part. Valuation in finance can be done. So there are three approaches that actually, one is discounted cash flow method. Just we understood, it is based on future expectation, right? So if we just taking this particular methodology, it is value, it is equal to the reward that we are going to get in future. So future cash flows based on future cash flow divided by 1 plus r to the power n. Right now I'm not explaining this because we'll be discussing this discounting factor later in this particular video. Second approach is relative valuation. This is valuation by comparison. This is nothing but valuation by comparison. So if you're comparing to make your own valuation, it is relative valuation. A very simple example, if I am going to purchase a house nearby my locality, सबसे पहला रिसर्च मैं ये करूंगा कि मेरे करीब में जो हाउस, जो भी प्रॉपर्टी है मेरे से सिमिलर जो प्रॉपर्टी है वो रिसेंटली कितने में सेल आउट हुई है। तो अगर वो 80 लाख में सेल आउट हुई है तो मेरा भी प्राइस कहीं ना कहीं 80 लाख के आसपास होना चाहिए। दिस इज वैल्यूएशन बाय कंपैरिजन। ऑल्दो इसमें there are two approaches that will come later on, that is trading comps and transaction comps, but right now it is not the matter for discussion. We will discuss in some other video. Third one is asset based valuation. Asset based valuation. Asset based valuation is basically net asset value, and this type of approach is commonly used when we are doing the valuation of real estate company and some companies which is asset based company like mining companies, and some companies which are managing the portfolio, financial portfolio. So these are the companies we generally take when we use this asset based valuation approach. So DCF, relative valuation, and asset based valuation, these are the three different approaches to do the valuation. Our point of discussion today is discounted cash flow method, DCF method. In this DCF method, as we discussed, that value is nothing but future case based on future cash flow. Now what we do to this future cash flow to get the actual worth of the asset, right? The purpose of this method is to find out intrinsic value. Now this intrinsic value is the real worth of any asset. It is a theoretical value based on certain assumptions. We call it intrinsic value. Now what is the importance and significance of this intrinsic value? Suppose I am going in a market, मुझे एक शर्ट खरीदनी है और उस शर्ट का एक प्राइस है जिसको मुझे लगता है कि ये शर्ट अगर 1500 रुपीज का मार्केट में कोटेड है तो क्या इसकी एक्चुअल वर्थ 1500 रुपीज है, या ये उससे ज्यादा का है, या ये उससे कम का है। ऐसा तो नहीं कि मैं इस शर्ट के लिए ज्यादा मार्केट में पे कर रहा हूँ या कम पे कर रहा हूँ, राइट? सो दिस इज द मेथड दैट टेक्स यू टू द ओरिजिनल वैल्यू ऑफ द एसेट. वी कॉल इट intrinsic value, or in other terms we can call it fair value, right? So we can also call it fair value. So the method which actually take us to the fair value of any asset is DCF method. Now how this fair value comes, right? What is the method? So for example, I am investing in a particular share जिसकी आज की रेट में प्राइस मार्केट में है 500 रुपीज. इस 500 रुपीज पे ये शेयर मार्केट में लिस्टेड है और मैं इसे खरीद सकता हूँ. Now if I'm able to buy this particular share at 500 rupees, what exactly is in my mind as an investor, that if I'm giving this 500 rupees to a particular share, whether it is actually worth it or not worth it. Now this thing can be answered in this particular method, that whether to pay for 500 is worth or not worth. The outcome and the objective of this particular method is simply to get the intrinsic value, fair value of the asset. Now we can compare, after calculating this intrinsic value, what happens? We actually compare it with the market price, right? The market price comes from the market participants, buyers and sellers. Now these market participants can buy and sell as per their own factors which is responsible for this. Sometimes there is a hike in the price because there are too much of demand of a particular product. So seller जो होता है वो अपनी prices को high quote करता है. और sometimes there is a too much supply in the product, बहुत ज्यादा supply होती है तो उसकी price normally कम होती जाती है. Because we have seen when in any of the season, right? Just like mango, when it is coming off season में ये mango आपको 200 रुपीज केजी पे मिलेगा, लेकिन जब सीजन होगी, जब इसकी सप्लाई बढ़ जाती है तो यही मैंगो आपको 40 और 50 रुपीज पर केजी में आसानी से मिल जाएगा. तो इट इज जस्ट सिंपली अ मैटर ऑफ डिमांड एंड सप्लाई. व्हेन देयर इज टू मच ऑफ डिमांड एंड देयर इज लेस सप्लाई, प्राइस इंक्रीजेस, एंड द वाइस वर्सा. इफ देयर इज टू मच ऑफ सप्लाई एंड लेस buyers are there, so price automatically goes down. It is simple economic phenomenon, right? So this is responsible of price increasing and price decreasing in the market. So it has own factor, but what price I need to pay, and I need to pay to buy something, that actually creates a question in the mind कि भाई मुझे what is the right price that I can pay for the product, and the answer lies in this method. Okay, so value in this particular method, we call it discounting method. Because what we are doing, we are actually discounting the future cash flow. So suppose in the first year, this particular investment or some investment is giving me some cash flow in future. First year, I'm taking cash flow in the first year, cash flow in the second year, cash flow in the third year, cash flow in the fourth year, and cash flow in the fifth year. This 5 years, I'm generating different cash flows. What is the method that actually gives me the today's present value? The main concept lies over is the present value concept. So what I'm doing, I will be discounting this cash flow with some discounting rate, and I'm adding. So this is discounting. This is discounting. I'm doing the discounting. I'm discounting with some rate. What exactly is the rate? We'll discuss. So every year it is. So for 5 years, I need to discount it by 5 different factors, and this is called present value factor. Right? The discounting factor I'm doing, it is simply 1 upon 1 plus r to the power 1 upon 1 plus r to the power n. Right? So suppose I'm investing in a bond that right now is giving me interest for the 5 years, and then after it is redeemable bond at the same fair value, same face value. Suppose I'm investing today 100 rupees in a bond that is giving me 7% interest every year, 7% cash flow every year, and at the end, this bond is redeemable at face value, right? So the last year cash flow is 7 plus 100. 7 is the interest, 100 is the principal amount that I'm getting back, right? So when I'm discounting it by certain rate, for example, 8%, so it gives me the present value of the bond, that the investor can pay in the market to buy these bonds. So every year I'm discounting it by 8% like this. So last year cash flow is 107, which is again discounted it by 8%. So this give roughly the calculation, whatever the answer is giving me some value, right? We call it present value of the bond. For example, I'm not calculating right now, but for example, I'm simply just take this. There are two situations I'm taking. On calculating this particular value, suppose I get 95 rupees, right? 95 rupees is the total sum. Or in the other case, if I get the value, okay, let us just first take this 95 rupees is the present value that I calculated with this. Now I go and search in the market. So this is the present value. This is the present value of bond. This gives me the fair and intrinsic value of the, I can say the original, the price that the investor should enter the investment in the bond is 95 rupees. Now it is available in the market. Suppose this bond is tradable and I am getting this particular bond in the shares, I need to pay 97 rupees. So the present worth is coming 95, but in market it is available at 97 rupees. It is higher. Now my intrinsic value, that is 95, is less than the market value. This is market value. 97 is market value. So this market value is higher. My intrinsic value is lower. In this situation, what I call it, that this particular bond is having less value than, less intrinsic value and a higher market value. I will call it overvalued. Because market is giving some premium to this particular bond. I can call it overvalued, right? And if the situation is reversed, suppose in market this bond is available at 92 rupees, right? In that case, my intrinsic value is 95, which is higher than the market value. Now this situation becomes where the market value is less than intrinsic value. It is called as undervalued. Now this is worth investing. So when your intrinsic value is less than the market value, it is overvalued, and when your intrinsic value is higher than the market value, we call it undervalued. So here we have learned about the overvaluation and undervaluation roughly. undervaluation, which is actually the core purpose of this particular model, this DCF model, right? Now coming on to the real example, taking a stock, right? Because equity investment, equity valuation, let us take an equity valuation. Now any stock which is traded in the market, we can calculate the value, equity valuation. Same way, we need what? We need future cash flows. So future cash flows in case of equity. Future cash flows in case of equity is what? It is either dividend, cash dividend, the company is paying cash dividend, and there is another term called free cash flow. So these are the two different future cash flows that could be the future cash flows to the investors. This is something which is paid to the investor. This is a theoretical future cash flows which we assume that the company retain in the business, and it belongs to the shareholder. But the purpose to have this free cash flow to a growth purpose, right? It will be again reinvested in the business, right? So when to take dividend and when to take FCF as a future cash flow, we will discuss it now. Second thing, what will be the discount rate over here? Because in case of bond, we have simply discounted it by some rate, discounting rate. Now here, if you talk about the discounting rate, what will be the discounting rate here to discount this future dividend and free cash flow to firm, right? So there are two things here in this, right? It is free cash flow to firm, and this is second category here, free cash flow to equity, right? Free cash flow to equity. So this is the free cash flow available to the entire firm, right? In which we include the debt also and equity also, and this is purely an equity side when you remove the impact of debt. So whatever the free cash flow which is left for the equity shareholders, we call it FCFE and FCFF, right? So discounting rate, what will be the discounting rate when will be? Yeah. So it could be WACC, weighted average cost of capital, and it could be cost of equity. Now this will be the discounting rate where we can discount this future cash flow. So when we are discounting the dividend, we use cost of equity as a discounting factor, and when we are taking FCFF as our future cash flow, we use weighted average cost of capital. Weighted average cost of capital is nothing but it is the sum of cost of equity and cost of debt. Right? It is taking weighted average because this equity and debt are in different proportion. Sometimes 70-40, sometimes 70-30 and 60-40. So it is in different proportion. The investment from the debt side and equity side is different. Therefore, we are taking weighted average cost of debt. Now, what will be the equation? How we can do the equity valuation, right? So first, let us understand the dividend side. So the approach that we use to find out the equity valuation, taking dividend as a factor, is dividend discount method, DDM method, dividend discount method. Dividend discount model, right? Dividend discount model in which the future cash flow is taken dividend and the discounting rate is cash flow to equity. So what will be the equation over here? It is value of share. What we are doing, we are actually calculating the present value of future dividend, right? Present value of future dividend in this. Present value of future dividend. Now, for this, when we can use this present value of future dividend, obviously वो कंपनी जो हर साल डिविडेंड डिस्ट्रीब्यूट करती है, वो कंपनी जो मार्केट लीडर है, वो कंपनी जिसका कैश फ्लो एक स्टेडी कैश फ्लो है, और वो कंपनी जिसका लास्ट 5 ईयर से वो कंटिन्यूअसली डिविडेंड पे करती आ रही है और नेक्स्ट 5 ईयर तक भी डिविडेंड पे कर सकती है, उस कंपनी के लिए तो ये मेथड इज गुड. बट अगर कोई कंपनी नहीं है या न्यू है, इट इज ग्रोइंग कंपनी, इट इज स्टार्टअप, सो इन दैट केस दिस मेथड I mean, if the company is not even distributing dividend, how we can apply this particular method, right? So in that case, we will be using FCF method, free cash flow to firm method, right? So here we will take the dividend of first year, we will discount it by 1 plus KE, that is cost of equity. Second year dividend divided by 1 plus KE to the power 2, and third year dividend same way 1 plus KE to the power 3. This is nothing but cost of equity. Cost of equity. Now this cost of equity comes from where? Who decides this cost of equity? Obviously, now I'm talking about the discounting. Let us come back to our original discussion, that is expectation, right? What we are expecting is I'm investing in a particular share, right? What will be the cost that I expect from the company? So it is the expected return, which is, right, this cost of equity is nothing but the expected return that investor expects. So investor expectation, investors expectation, how this investors expectation. So it's a theoretical, it's a something that how we can calculate, right? Being an investor, I can expect anything. So there is one famous model that is called CAPM method, right? Capital asset pricing model, that gives us this. Now this capital asset pricing model gives us the expected return of the investor, how investor expects. Basically the investor start expecting from risk free rate of return, कि बिना रिस्क लिए मुझे कितना रिटर्न मिल रहा है, तो बिना रिस्क लिए मुझे रिस्क फ्री रेट ऑफ रिटर्न मिल रहा है. फॉर एग्जांपल, इफ आई एम इन्वेस्टिंग इन अ गवर्नमेंट बॉन्ड, आई एम गेटिंग 7% रिटर्न, that is the risk free rate of return without taking risk I am investing in this. Plus if I am taking risk, then what happens? So I will charge some premium. So being an investor, I will charge some premium on behalf of taking my own risk. So I'm taking risk, so I'm charging more return, I'm expecting more return, and that is nothing but the return which is given by the market and the difference between it. For example, the market is giving me 14% return, right? Nifty, Sensex, this market is giving me 14% or 15% return, right? So my reason for taking risk is 14 minus 7%, because 7% in any way I am getting it, right? So this is my expected return. So I'll start by creating my expectation from the risk free rate of return, क्योंकि वहां मुझे कोई रिस्क लेना नहीं पड़ रहा है, लेकिन क्योंकि रिस्क फ्री रेट ऑफ रिटर्न है, इसलिए मैं आसानी से उसमें इन्वेस्टमेंट कर सकता हूं. लेकिन अगर मैं रिस्क लेता हूं तो मैं मार्केट से प्रीमियम चार्ज करूंगा. दिस इज नोन एज रिस्क प्रीमियम, जो कि इन्वेस्टर चार्ज करता है रिस्क लेने के लिए. नाउ आई एम इन्वेस्टिंग इन एनी सिक्योरिटी, लेट अस सपोज आईसीआईसीआई बैंक. अब आईसीआईसीआई बैंक को इन्वेस्टमेंट करने के लिए मुझे जो अपना एक्सपेक्टेशन बनाया था वो मार्केट से बनाया था. नाउ आई एम इन्वेस्टिंग इन अ पर्टिकुलर सिक्योरिटी. Now this security is two time risky. The security is two time risky than the market. Suppose, so market is giving market में मैंने assume किया था 14%. अब मैं और ज्यादा रिस्क assume कर रहा हूँ, क्योंकि मैं एक ऐसी सिक्योरिटी में इन्वेस्टमेंट कर रहा हूँ जो कि मार्केट से 2 गुना रिस्की है. So what I will charge? I will increase my risk premium. Okay, so what I will do, I'll simply take this 2 over here. This 2 is nothing, a very famous term in finance called beta plus beta. So this beta is nothing but the relative risk the investor assume as compared to the market, right? So this becomes my RM minus RF. This is CAPM equation, which actually gives you the cost of equity. From here, we use this cost of equity to discount this. So this is nothing but that cost of equity coming from the CAPM model. So this is coming from CAPM model, and this is nothing but expected return of investors. So this is how the value of securities can be calculated. The value of securities can be calculated with the help of dividend discount model. So we found that the value of equity is nothing but the present value of future dividend or future cash flow. Today we discussed the one of the method, dividend discount model, in which we have taken future cash flow as the dividend, and which we have discounted it back with the help of CAP, with the help of equity, cost of equity that comes from the CAPM model. Now we found that equity valuation, present value of equity, is nothing but the discounting of future dividend. डिविडेंड डिस्काउंट मॉडल हमें सिर्फ एक फॉर्मूला नहीं है, दिस इज नॉट ओनली द फॉर्मूला दैट वी हैव लर्न, राइट, इट इज नॉट ओनली द फॉर्मूला, दिस इज वी sometimes the equation we found that it is only the DCF, right? तो ये सिर्फ हमें फॉर्मूला नहीं सिखाता, राइट, ये हमें इन्वेस्टिंग का असली माइंडसेट बताता है। स्टॉक की रियल वैल्यू उसकी करंट प्राइस में नहीं होती, बल्कि उस फ्यूचर कैश फ्लो में होती है जो इन्वेस्टर को मिलने वाला है। मार्केट में शॉर्ट टर्म में इमोशंस पर चल सकता है, बट लॉन्ग टर्म में वैल्यू अल्टीमेटली कैश फ्लो और फंडामेंटल से ही डिसाइड होती है। और इसीलिए डीडीएम, दैट इज डिविडेंड डिस्काउंट मॉडल, हमें एक पावरफुल लेसन देता है। प्राइस इज व्हाट यू पे, बट वैल्यू इज व्हाट यू रिसीव। तो जब आप भी किसी स्टॉक को देखें, सिर्फ उसका मार्केट प्राइस मत देखिए, ये समझने की कोशिश कीजिए कि कंपनी की फ्यूचर में शेयर होल्डर्स को कितना रिवार्ड क्रिएट करेगी। दिस इज द रियल एसेंस ऑफ वैल्यूएशन, एंड दिस इज वेयर द इंटेलिजेंट इन्वेस्टिंग बिगिंस। थैंक यू सो मच।